Oh, why couldn't the weekend be longer? Am I right? But hey, this is where we are. We got to get back to it. We got to focus up. Whew. Okay, 8:49 a.m. This is Ryan Sweeney coming at you with your pre-market action on 14th June 2021. And so we got a beautiful morning here for you. So dollar is pretty much flat. 10-year yield is slightly higher. We got gold and silver under a fair amount of pressure. Gold down to 1850 right now. Silver down to 2762. Oil up 1%. No surprise. And the index is pretty much flat on the day. Dow slightly lower. Nasdaq slightly higher. S&P 500 flat. So, did we really hear anything over the weekend? Well, here's the first thing. We did have this G7 meeting among the leaders, and I don't really think this is driving the market, but I want to use it as kind of a context to help us further understand this market because, to me, when you go in high school and you have these little debate roundtables and you bring in your book and nobody really read the book and everybody's just kind of riffing off of whatever spark notes they kind of get, and it's just kind of note cards, and I mean, you get some discussion, some of it makes sense, but ultimately it's just kind of an exercise. You're just trying to get through school. At least that's what I was trying to do. That's what I see when I look at these round tables. I mean, I really don't think that these world leaders display any sort of intelligence. I mean, we had our own president coming out confusing Syria with Libya like twice. We had Boris Johnson coming out looking like, I don't even know what I want to say about Boris Johnson, but he's it's just so scripted. It's so fake. I just look at it and it makes me sick because they talk about things that matter, but ultimately there was absolutely no mention of the actual drivers of what's going on in the world at these meetings. Ultimately, I just think these meetings are props to confuse people, to distract people from what's really going on in terms of the banking system, the monetary system, how people are being taken advantage of in this environment, and what we need to be doing to help ourselves in this environment. I mean, they don't mention anything, say, about the negative effects of quantitative easing long term, or the how big inflation is going to get or could get. They don't talk about their central banks, and if they do talk about the central banks, it's our central banks can help us combat climate change, i.e., the central banks can print a lot more money and gain a lot more power because we're going to institute this policy and we're going to convince all of you that you need it. Again, I'm an environmentalist to the highest order, but this is how I view the movement being taken advantage of. But just watch. I can barely watch these videos, but watch a couple of these G7 videos and just look at these people. Are they really that much smarter than you, or are they reading off of a script? Are they being told what to do, and it's really just a show? That's my opinion. You have yours. Anyways, so what am I gonna do this morning? I mean, we see oil taking off. That's all well and beautiful, but gold and silver. I know that I'm a big gold and silver person. Look, I will be buying this dip. I want to talk about dollar cost averaging. You always need money on the side. And I think gold and silver, say by January of next year, are going to be considerably higher from where they are now. So I have options dated for January. I have options. I'm probably going to open options for March this morning. That's my current thinking. But I'm not going all in. I'm never backing up the truck for any of this stuff. I'm trying to play it smart. Add a little, and it will reverse. And when you're playing with gold and silver, you got to understand that they still rig the price of these assets. Gold and silver have no business being where they are right now. They should be multiples higher. That's the truth. For example, you think about where gold was at in 2011. It was like 1900 or whatever at its high. That was when the Federal Reserve's balance sheet was a fraction of what it is now. Probably a quarter. I didn't look this up. But and silver was at 54. And they were still rigging the prices back then. Don't get me wrong. Gold was at 800 in 1980 something or whatever, or 79, So they've been rigging the prices of gold and silver for a long, long time. Ever since they had these derivatives, SLV, GLD, that they can just print in excess pretty much to infinity and create artificial shares of silver and gold that don't actually exist physically, but they can sell it onto the market. So you'll see massive amounts of paper silver dumped onto the market, dumped onto the market, dumped onto the market. By who else? JP Morgan. They're the one. They've been even convicted of this stuff. So I understand that rigging goes on. It's hard for me to trade these things, but I just love them so much that I choose to trade them. And it's not really a hope-based decision, because you just have to understand that they won't do it forever. And there are periods where they allow the price to correct to its normal action. And so I buy long dated options, I slowly add to these positions, and I wait for that time when the prices are allowed to go up. And I believe in this environment, they will go up simply because all the underlying factors are already up. And so then you have to look at the psychology of how does it look when gold and silver are falling like this, but we see lumber prices quadrupling in a year. We see copper prices inflating. We see all other commodities inflating. People are going to realize that they do realize there's something wrong. And a lot of people overseas in smarter markets buy the physical thing, and they understand that it's a real thing. And look, I own the physical thing, but I also do trade it. And so it's a much tougher game. It's a much more risky game. But I'm telling you right here, right now, I will be buying the dipping gold and silver. Probably March dated options on maybe some gold stocks that I like. Maybe I think silver is the bigger opportunity, but at the same time, gold technically looks a little bit better to me at the 1850 level. Although, we'll see if we've broken below that. We're 1847, so if we keep falling, we'll see. But I'm telling you, right now, that is what I'm going to be doing. And if it falls more, I will probably buy more. This is just how I play the market. I always keep cash on hand. I'm almost never fully invested. There's times when I have been, and it's scary. I don't really like it. So that's that. In terms of the dollar, we need to see the dollar below 90 still. This is still the game. But that being said, I'm still not scared as long as it doesn't go solidly above 91 and stay there for a couple days. That's the top of this range that I have pinned out. But I need it to break below 90. Period. End of story. I don't have much more to say. We can talk about crypto is making a nice rebound, and it's nice to see crypto going up despite gold and silver falling. In the last 7 days, Bitcoin's up 7.6%. Is that almost 40,000 again? Ethereum has been performing okay, but most of the altcoins are falling, underperforming Bitcoin in this environment, and I do think that'll reverse. But for now, Bitcoin is asserting its dominance again, and we could say it's off of the Elon Musk stuff. Look, Elon Musk plays his games with the crypto market, but the actual driver of the crypto market is not Elon Musk. It's the Federal Reserve. It's the inflation game. It's this move into a new monetary system. It's understanding the role that cryptos have in that new monetary system. So Elon Musk gave us a gift when he came out and crashed the price of cryptos, because he doesn't matter. He's a pawn just like the rest of them. That's probably hotly debated, but I don't even want to get into my opinions on Elon Musk and what he does, how much it matters. But cryptos are beautiful, beautiful assets, and I love owning them. And I just think they're going much higher. I still think though I've been saying this 40,000 level, maybe 42,000 is a consolidation range though. So we're still not out of the woods yet there, but I said sooner than later, and it's looking like sooner that they'll break out of this. So I will see you at the end of the day. Hit the like button, hit the subscribe button. Hope you enjoyed this. See you later.